Hey guys, good morning everybody. Today is Friday, December 13th. It is 6:24 right now. Market's gonna open in about 6 minutes. So I'm gonna go ahead and set up this room real quick and we'll get started shortly with our analysis for today. Got a few things here to update. Started a little late today, sorry guys. Um, had a bit of a connection issue when starting up this morning. Perfect. So as people join in, I'm going to start marking liquidity over here real quick. It's going to mark the nearest prices. Looks good. All right. Looks like we are good to go here. So, all right, guys, good morning, everybody. Today's Friday, December 13th. It is 6:28 right now. Market's going to open in about 2 minutes. I'll know the direction of the breakout shortly in about a few moments. Looks like it's going to be a buy for the day. I'm not going to be taking the breakout on my accounts because, like I said before, guys, the uh, the 2-to-1 risk off plan is currently active right now. So we had two losses this week. So I'm not able to take a trade until we have a win. Since we didn't have a win yesterday, I'm not able to take the trade today. I'm just waiting for the market here to stabilize a little bit because, obviously the sideways move that's been happening throughout the week with the whipsaws. So it looks like we might be flipping the breakout to a sell here if this red candle closes or red signal closes. All right, so the breakout for today is actually going to be a sell, guys. If the only way that this will flip the other way back is if this candle at 629 is a little too big. So if this candle at 629 is more than 50 points, then um, it'll be flipping back to a buy. But as of now, it looks like the breakout for today is going to be a sell. Again, I'm not taking the breakout, guys. So if you guys want to take it, feel free. I'll be documenting it because in order for me to take the next trade, I need to have a win today. So if there's no win today, then there's not going to be another trade on Monday. I have to wait for that to be a win before I can finally take the next trade. So Again, the breakout for today is going to be a sell, it looks like. Currently running right now. So opening price was here, color that blue. So there goes a breakout, guys. Currently still running right now. Not too much movement, kind of similar to like yesterday, back and forth over here. Um, so it's pushing down a little bit. Just hit liquidity right there. Having trouble getting past the pivots down there, it looks like. The volatility is looking pretty nice. So again, direction for the breakout today's a sell. It's kind of pushing down right there. Looks like it's trying to get back to this lower end right here, but it's kind of having some trouble pushing through. Here we goes. Price pushes to the next level of liquidity down below. Yeah, again, there's just not very much direction here, guys. Same situation as yesterday. Price is trying to push down, but as you guys can see, price is kind of going back and forth, has trouble getting, right through. Um, but we'll follow it through right here. There's not very much direction here. Price is just going sideways. Here's the clean chart, as you guys can see. Price is kind of rejecting off the levels right there, but it is having trouble kind of getting down to the full extent. So price is pretty much ranging between, let's say we'll say like the 400 right here or the 44,000, and it's just going back and forth. So this is just how it's been all week. So on Monday we had a whipsaw back and forth. Tuesday we had a win, pretty nice directional move. Wednesday whipsaw back and forth. Yesterday whipsaw back and forth, and then again today whipsaw back and forth. So I think it's a good week that I've kind of sat out the breakout because of the current market conditions. As you guys can see, there's just no direction here. Price is going back and forth. Unfortunately, it's not as consistent as it needs to be to really yield what we need here. So we'll keep uh we'll keep looking for price to kind of move around, but I mean, for the most part, you can see there's not really too much going on here. Liquidity got hit pretty much on both ends. So if you guys took liquidity on the top end, this one right here got hit. This one right here slightly triggered. And again, price is kind of just sitting around right now. So we'll see what happens here next. Looks like price is pushing up a little higher. It's knocking out liquidity above. See if it keeps climbing here. There's a lot of liquidity sitting up here. So there's a lot of liquidity just hanging out and sitting up there. So liquidity here got hit, guys. If you guys took any of these levels, Price is still pushing up to the upper levels of liquidity right there. Looks like it's probably going to push up to the sessions up there. So if you took any of these levels of liquidity, I mean, all pretty much got hit. See here, it swings back up higher. Same situation, just, I mean, kind of back and forth movement here. All right, so we're still looking for some sort of direction here. Looks like price is faking out around this whole number at the 50 mark. So fake out right here and then back into the range below. So this is the big range right here down below. What I would say to look out for if you are looking for entries is, look out for the fake outs outside these areas. So like fake out up here and then fake out down here. It's really unfortunate that the market hasn't been going directional because it's really hard to take entries here, especially for the directional moves. It is, I mean, it's just a sideways move again. So let's check the breakout again for today. So the breakout for today did not hit again. So again, I'm not taking any breakouts until the breakout hits. The problem with the market lately, and let me see if this here would have lost both directions. So this here would have lost for a sell. As you can see, price spiked. It came down in profit, but then it spiked back up. So here's the problem. If you look at this here, if you were to take a buy here, I don't know if this would have hit stop loss yet, but it would have. So you guys can see because of the whipsaw type market that we're in right here, it doesn't matter which direction you take, whether you take a buy or whether you take a sell, you get stopped out either direction because price is spiking in both ways. We didn't really see this very often anytime before this week. We maybe saw this like happen once a month. But this has been happening 4 times this week. So it happened Monday, it happened Wednesday, Thursday, and then again today, Friday. So I'm glad I didn't take the breakout today because it wouldn't matter which direction you would have taken the breakout, whether you took it for a buy or whether you took it for a sell, you would have gone whipsawed out right here. The only solution to this is to switch to a 1-to-1 risk reward. So instead of doing a 50-100, we would do a 100-100. So we'd be able to prevent getting caught in the whipsaw right here. But because this has only happened for this week, I'm not going to make any changes. I'm going to wait first for the market here to kind of like choose if it's going to have a direction next week. But if this is the case and it just keeps doing the same thing over and over again, then, obviously I'll just adjust TP stop loss. I'll make the stop loss wider so that we don't get caught in these whipsaws here. But for this week, I've only taken one loss because I took the loss on Monday and that was about it. I didn't take the win on Tuesday. And I didn't take any of the losses any of the previous days. This is following the risk off plan. So this is the reason why I created the risk off plan for market situations like this. Whenever we have like a losing streak because of this whipsaw movement in the market, instead of me eating these losses, I'm just going to wait out. And then when the market starts to move directional again, I'll start taking the entries. So right now there's no entries for any breakouts up until we have a win. So I'll come back and check again on Monday to see if this does play out. Otherwise, we've had this situation happen 4 days this week, which is pretty crazy, especially because it's only December 13th. We have about 2 weeks till Christmas. So we're not really that close to the holiday week yet. So this is kind of how YM is moving lately. It's just been going sideways. So again, if you guys took the entry, I think some of you guys have been switching to a 50-50 TP stop loss. It looks like if you guys would have done that, your sell would have won. But yeah, I mean, that's the only difference you can do. You can either switch your TP stop loss to a 50-50 or to a 100-100. I think a 50-50 might make more sense because you can see over here, the sell would have won for a 50-50 TP stop loss. So if your TP was at 50 and you're doing a 1-to-1 here, this would hit your profit target and then would have shifted the other way. So, all right. So with that said, I mean, we'll continue to keep looking here, but as of now, there's not really too much here to look at. The main thing that I would probably look for here, let me clean up the chart. If you guys took any liquidity here, all of the liquidity here have gotten hit, so I'm going to clean this up. The thing that I would wait for here or look for would be obviously like a breakout V3 continuation. There was a breakout V3 continuation pattern that came up right here, but the candle right here is just a little too big. So would not have taken that one specifically because this green candle right here was about 30 points. All right, so we'll keep looking. Let's take a look at the order flow over here. We don't have any BV3, any breakout V3 continuation order flows here. I don't see. So this might be a BV3 continuation order flow right here. If this candle closes with a delta above 100, if anyone is looking to take this here, the delta's got to close above 100 though. It's got to be for sure above 100. It's not looking like it now. Delta's coming down. It's about 37. So this has got to be a big green candle. Delta's got to be above 100, which it's not looking like the case here. Yeah. So no breakout V3 order flow here. You can see the buyers here are not really in control at the moment. Here's the SR chart. Let me go mark up some SR zones here. So got one zone right here. All right. So looking at this so far, this is currently where price is currently ranging with regards to the support resistance. So we have the 10-minute resistance up here. We have the 1-minute support down here. Price is pretty much just ranging within this area. Looking at our clean chart, like I said earlier, guys, price is just faking out up here. And then it pulls right back into the range, which is for the most part, this whole area down here. So you see a little fake out up here, it pulls back into the range. We've been like in this type of market for a while now. Yeah, so there's not really any room here for entry. I mean, if you guys want to take entries, feel free. I'll look up the scalps if there's anything here that'll come up. There's a possible high-low momentum scalp coming up right here. So there's a higher high right here. As long as the sell signal breaks and closes past pivots 1 and 2, this will be a sell entry for a high-low momentum scalp. No entry there. Sell signal actually didn't close. Nice. So Sam over here said he sold at the top via one variation, 1 hour resistance for him. Yeah. So Sam over here actually took a sell right here when it rejected off the 1 hour resistance. Saw 1 hour resistance, rejection, double body rejection, came back down right here and rolled this down. Nice work, Sam. Yeah, that's probably the best way to take these V1 variations if you take them at certain structures. So like you can take them at support resistance, you can take them at pivot rejections, you can take them at a lot of things. You know, as long as you have some sort of confluence with that V1 variation, the odds of it like bouncing off or doing something that you want is very likely. So nice work, Sam, on catching that there. Max said first day back on my wins with liquidity. We'll take what the market gives me. Yeah, exactly, Max. I mean, I haven't taken anything, so I'm kind of I've just been conservative this week. Like this whole week, you know, the market was kind of looking a little unusual to me. So, I mean, I've just been conserving my capital this week. I took one loss this week, which was a breakout on Monday, and that's pretty much it. It's been like not taking anything, honestly. I've been trying to take stuff, but just don't really see anything here to take. Let's see. Sam said risk-free now, would love to close at opening. Yeah, looks like it did close, it passed the opening right there, Sam. So it looks like you might have gone that full move. 40 points. So I'm assuming your style of trading is you're trading the support resistance bounces or support resistance reversal, Sam. Is that what it is? Seems like it. I like trading that way too. So maybe in the future I'll just keep looking up the SR zones here because I think those are pretty good entries. I mean, honestly, if you can find them, like again right here, right, there was another support resistance V1 variation right there. Price came down, pretty nice. The strategy that's similar to like what you're doing is we used to call it the snipe strategy. So I think a few people here still apply, like Talanji applies it. We would actually use another confluence on top of that, Sam. Like, so what we would do is we would use the pivot. So we would use like a double rejection. So what I would look for is I would look for a direction of, and here's an example right here. This isn't a V1 variation, but it's basically the same type of pattern. We look for a buy signal. We look for a rejection off the pivot and rejection off support or resistance, wherever it is. And then we ride this up. So this would be considered what we call a snipe entry. Price came up, buy signal, rejected off the pivot and off the support level. And then we would take this here for a buy. But you're using a V1 variation pattern. So that's like even a stronger pattern to look for. So yeah, if we had this and this was a V1 variation. Oh, actually, it's right here. So here's a perfect example, Sam. So this candle over here was rejecting off the pivot and it was also rejecting off the support level and it was also a V1 variation for a buy. So this here is like a trifecta. It's like a triple confluence. You got two confluences for rejection, which would be off the pivot and the structure, and then you have momentum here. So this here actually would have been a great buy. Yeah, it's actually a really solid buy. So, I'll try to revisit these older strategies that we've been applying in the past. I mean, they go hand in hand with like what people are applying anyways. I think the confluences here for the rejections are probably going to be very key, especially with just like with the type of market that we're in. I think with the market that we're in now, we can still trade directional entries with this type of market, but the main thing is that you have to look for a little more confluence. You have to not just the strategy stand alone, but look for a sort of confluence there to identify bounces, because since we're in the sideways market here, what typically happens is a lot of reversals. So like if you see a V1 variation off structure like this right here, like what Sam took, this will show you that price is pulling back into the range. And then that also followed in with our analysis here that I marked up for you guys, where I said if price breaks out of this area, it's probably going to pull right back into the range below. So there is, yeah, I mean, there's a lot here. There's a lot to play with. So you just have to adapt with the market. Like I told you guys in the past, like the market's always going to be changing. So there's a couple things that you can do. You can either keep trading in a changing market and take losses, or you can be conservative and just wait for the market to kind of stabilize a little bit, or you can adapt with the market and you can trade in these types of market conditions. So, obviously the main things that you want to do is probably either be conservative or adapt with the market. You don't want to just keep doing the same thing you've been doing for the past couple months and then eat up losses here when, market doesn't go straight how it should be. So that's all you got to do. Yeah, let's see. Sam said, yeah, I'm trying to learn your strategies. I'm taking my time as it's very different than what I know so far. And I do not have your indicators. Yeah. I mean, you can follow just as good with this on the live session, Sam, just like how you are looking at these V1 variations. I mean, it's not really difficult, right? Because you see the high lows on the chart. So yeah, if you have your own zones on the chart, or if you're looking at my zones here and you're using using them as a confluence, I mean, they totally help a lot with regard to identifying confluences for your entry. Yeah, because like, I'm pretty sure like before you weren't using the V1 variations and you were just using support resistance, right? So now that you have this tool or you have this idea and theory where the reversals are happening, like it helps even better. So instead of just catching the bounces off the support levels, you would just ignore these regular bounces and wait for those V1 bounces, right? Because when you see those V1 bounces, then you already know price is probably going to actually reverse to the upside or reverse to the downside. And it's also good that you're using a super tight stop loss as well. Viv said, I just want to find one strategy that I can practice and master. My problem is that I get distracted with all the different strategies. Yeah. So that's why you should probably just like what you should have, Viv, is you should have like whatever strategy you're looking for, just have it listed right here in front of you so you don't look at anything else. So if you're just looking at something um, like the breakout V3 continuation, how did I put it on here? Let me refresh this chart. I don't think I refreshed this one. That's why. Because I swear I saved it when we were doing. Like, I don't know where all the strategies are. Because when we did the last session, I thought I put it on here, but it's okay. I already have it on here anyways. So, like, basically what you want to do, Viv, is you just want to have all the criteria on your chart and don't look at anything else. Like, just have the criteria there and then just look for that specific strategy. If you want to do the breakout V3 continuation, then then basically that's all you want to look for. It all comes with discipline, just like what I was saying before. Um, I'm disciplined that I'm able to just focus on like the main strategies that I'm looking for, right? I'm looking for the breakout on open, which obviously we're not taking right now because we're on the risk off plan. But I'm also looking at breakout V3 continuations. I'm looking at some market flows, but I need the market to be moving in my direction. So I'm really just focusing on two different strategies. And then I'll call out other stuff when I do see them come up, like, high level momentum scalps because price is going sideways. So you should probably have like maybe just have the strategies in front of your chart, or like what people do on the other hand is they put like a post-it on their computer, like somewhere on the computer that's like bright so they can see their rules and like what they're looking for. So you just got to be able to zone out the noise, Viv, because on this live session, obviously you're going to be seeing and hearing things, and it's going to make you want to take other entries. But for the most part, just focus on whatever you're focusing on, which would be that one strategy. Yeah, Sam said, I'm thankful you do live. It's like a teacher and a great support. I don't feel alone trading. Yeah, no, definitely, Sam, 100%. I agree with you. Yeah, Talanji said, got all my strats on sticky notes around my monitors. Yeah, no, that helps a lot. If you're like, I think what a lot of people need to do is they need to be reminded of like what their end goal is, right? Because there's a lot of strategies to follow, but if you know like, oh, I'm looking only for market flow B2s or I'm only looking for liquidity, then you can just zone in on that specifically. All right, we got price coming all the way back down. So as you can see over here, like I said earlier, guys, we have this huge, huge just whipsaw back and forth. It doesn't matter where price is going because there's no direction here. Price is just going back and forth. So that's why I'm not looking for any entries here. Like I said, you can trade these types of markets, but for the most part, for me, I already know my style of trading. I know where I shine at the most, which is directional trading. And because there's no direction here, I'm just not taking anything. So again, price is up here, fake out, pull back into the range, and price is back into the range that where it was earlier. It's like it didn't go anywhere. So again, looking at this right here, I'm going to go ahead and take a screenshot of this. So I'm literally just going to copy the same analysis from yesterday because it's the same thing. So it's a breakout for today would have lost either direction due to whipsaw movement on open and low volatility, no direction or price movement on open for this week for 4 days. It's not even 3 days, now it's 4 days. Very unusual for early December. I did not take the trade following the 2-to-1 risk off plan. So like I said, I didn't take the trade today because I need to have one win. And again, right here it says need one win before we start taking any more breakout entries. Only optimal change would be to set RR to 100 points both ways to avoid the chop. 100 or 50 points. So you guys can see the setup right here. It doesn't matter if you take a buy, it would have stopped out for a sell when it came down. If you took a sell, it would have stopped out because price pushed to the upside. Same thing with yesterday. So if you look at yesterday's market, it's the same thing. It doesn't matter where price went, down or up. But if you had a 100-point TP stop loss, so you can see over here, if your TP was 100 points and your stop loss was 100 points, you would have survived it and would have hit your TP. Same with today, it looks like. So let's just go and change the TP stop loss here. So like I said, if you want to keep trading the breakout, you can. The only difference that you probably need to make is adjust your TP stop loss, because a 50-point stop loss is not going to cut it, right? You have to change it probably to 100. And you can see here, if you did do that, your trade would probably still be running, and it's probably on its way down to TP right now. So, I mean, that's kind of what we're working with right now. I mean, it's unfortunate that like this is the type of market that we're currently in, but I mean, it is what it is, right? You can't really, there's nothing here to really, I mean, that's your only solution. If you want to keep taking the breakout, you just got to adjust your TP stop loss because there's no direction here. So again, we're just waiting for price here to kind of do something and choose a direction. Right now, price is still technically going sideways. Here we go, as liquidity got hit. If you took this lower level of liquidity right here, full TP. If you take this lower level of liquidity right here, also full TP. This farther down level right here, I wouldn't take this one because it's so far down, but if you got to take this level of liquidity, it's currently at that level right now. The only problem with this level is that it's so close to the sessions that I probably would not have messed with it here personally. All right, here we go. As price drops lower. See if there's any zones down here. 5-minute zone down here. Anything lower than that? Yeah, Sam said if only he was holding, right? That's the hard part about holding a position, right? It's like when do you hold and when do you not? I know some people like to like remove partials, but I just don't have the stomach to hold on to a position like that for that long. So for me personally, I'd rather just be out. All right, so price is currently down here right now. Let's take a look at order flow. See, I like the order flow that we were talking about the other day, guys, but the problem with like following order flow is that you have to like literally be on the charts and following it all day long because it doesn't happen very often. Like obviously there's no order flow entries that came up today. Yeah, nothing there. So although I do like workflow, I don't want to be following the charts like that, honestly, guys. I think you're better off just by sticking to the regular scalps. I mean, if you want to take the order flows, feel free, but I feel like looking at the order flows, it's just a lot of work. So I mean, it's fine if you guys want to follow them, but also very situational. All right, so we have price over here below the range, guys. We'll see if price ends up faking out. There's two things that may happen here. So one thing is that price may fake out and then pull back into the range, or price may continue dropping and drop further from here. So we'll see what happens here. So I'm glad price is actually dropping further. I'm hoping it doesn't fake out because I'm really tired of this whipsaw market that we've been in lately. It's like, and here we go. If you guys took the breakout and you held on to it for 100 points, like I said, it would have hit your TP. It would have taken longer, but it still would hit your TP. This would be the long-term move. So this is just something that I'm going to be keeping in mind. I'm gonna put this in my notes actually. All right, so let's see. I'm going to add this to the list. So December 13. For today was a sell. I'm just adding the data to my models here so I can follow through. Yeah, so all of the models here are basically at a loss aside from if we were to shift it to 100 CP stop loss, then this would be a win, of course. Which is fine. If the models are like that, it just shows that the market's not really moving how it needed to, and it's probably best to just sit out of the market for these breakouts, which is exactly what I'm doing. I only took one loss this week, thankfully, one loss on Monday, and then I've pretty much just kind of been coasting this week, waiting for a win to happen, which hasn't happened. And it happens, sometimes the thing that a lot of people need to understand is that your strategy, whatever strategy it may be, whether it be a breakout, a directional move, a sideways move, any type of move, really, your strategy is going to have time periods where it's just not working. And you have to be the person to understand that, like, when it's not working, it's best to just sit out of the market versus forcing entries. Because if you just force entries, like, for example, if I forced entries this week, I would have ate way more losses than I should have. The thing is that, like, the market direction was out of my control. If you look at the markups again, like I showed you guys previously, it wouldn't have mattered which direction we traded in because either way, it would have ended up with a loss, right? So we'll see. We'll see as we move forward to next week, what's going to happen next. I mean, obviously there was a win on Tuesday, but we'll see if next Monday wins. So looking at price here, it looks like it might be faking out and pulling right back up. It's actually a V1 variation right there, Sam. Not sure if you decided to take that for anything. Let's see if it rejected off the support. So I didn't see a support level here, but there was a V1 variation at that point. Double body rejection off that lower low. So probably not because there was no support level there, but this could be the possible fake out back into the range above. Or not. Or this can be possible break and retest continuation to the downside. Trying to see if there's anything else you could look at, but not too much. Let's see. Sam said I wanted to, but bias for me is sell. Yeah. So, I mean, I wouldn't have taken the buy here either because looking at the bias over here as well, I would say the bias is also for a sell. Since the trend here is bearish, let's take a look at the overall right now. So looking at the 4 hour, it's currently bearish. 1 hour is bearish. 30 minutes bearish. 10 minutes bearish. 5 minutes bearish. And the 1 minute here is also bearish. So looking at this here, yeah, I would agree with you too that I wouldn't have taken a specific entry in that direction like that because of the yeah, the bearish bias here. Yeah, I mean everything here is for the most part pretty bearish. So I probably would have done the same thing. I probably would have just looked for sells here in your situation since it's likely that price will likely continue to drop, further. And I keep trying to zoom into the order flow. This is why I get so annoyed when I'm looking at order flow because I zoom in really, really close and I still can't see the delta. Like I got to zoom in like extremely close to see the delta. It's kind of annoying because I don't want to have to, like, for example, I can't even see the delta here. I got to zoom in even further. So this is why order flow kind of annoyed me a little bit. I mean, there's other ways to look at order flow, but I just don't like looking at it because it's harder to see. I feel like it requires more work than I'd like to do to look at order flow. I guess I could create another indicator that will like add the delta number to like the candles that we have on the chart. Um, but I'll save that for another day. Yeah, I'll see if I could figure out a way to do that. All right. So, like I said earlier, guys, probably a fake out down here and a push back up. Price did push back up a little bit, but it looks like it might just have pushed up into this current range. So we went from, I mean, the market here is messy. So I'll just draw my own lines here so that you guys can see. Let's see, let's color it black. Yeah, so you guys can see here, the market is super, super messy. There's no confirmation of push to the upside. There's no confirmation of push to the downside. It's just price kind of pushed up here, faked out, price pushed down here, kind of faked out. And now it's kind of just sitting in between this middle area down here. So we've got a bit of a messy chart here. I'm not going to force any trades here, of course. I'm just going to be looking for any possibilities of opportunity. Yeah, there's just nothing here for us to really take, to be honest. Kind of just the sideways market. This is the type of market that I don't like trading in. So you guys can see here, this is the reason why, because it's really easy to get caught in fake outs. For me personally, I like to trade when markets moving very directional, to the upside, to the downside, doesn't matter which direction, but I like at least some direction here. So let's see, market opened up over here at 6:30. So we'll say from 6:30 up until like right here, there was a little breakout. I mean, it's a very little breakout. So again, I'll use my color coding here to show you guys kind of like what the market structure was looking like. So price went sideways here on open. It was a sideways market. Price pushed up very quickly right here. And then it went back into a range right here. So sideways, breakout, sideways further. And I would say market went sideways up till here. And then from here, it broke out down to the downside. I wouldn't say this is a directional move. I would just say this is a breakout because there was no break in, there's no continuation. So I didn't do this, right? All it did was it broke down and then it went back into a range right here. So there's like maybe like a few candles here where price kind of broke past it. So price was going sideways. It broke past it for like maybe 2 or 3 candles, and then it went sideways for quite a while. And then it broke out right here for again like 2 or 3 candles, and then it went sideways right here. So it's been going sideways since. Um, I understand this market structure. So for me, it's like, okay, don't take anything right now. Just sit around and wait for the most part, because there's just nothing here for me to take at the moment. So I'm just gonna sit here and wait again. Like I said, guys, there's just nothing here for us to take. Price here is just continuing to go in a sideways move. Let's see. Sam is asking, Sean, you had a support below, right? Yeah. Well, no. So let me check real quick if there's a support down here. So there's actually a support there now. That's right. So there is a support down there now. If I take this off, there's probably a support right here too, which turned into a resistance. So it looks like price here is kind of just ranging. It's the SR charts. So all of these zones right here are support and resistance. I don't really label them specific support and resistance. They're just there because, support can turn into resistance, resistance can turn into support, etc. Like this right here was a support established from this lower low. And then now it became a resistance because it retested right here. So it was a support, price broke below support, turned into resistance. So as you can see over here from the SR chart, price for the most part is currently ranging between this resistance and this support right here. Broke below, created support, pushed back up, established resistance, and now it's just continuing to bounce back and forth between this area. Here's the order flow chart. So looking at the order flow here, there's just no entries for breakout V3 continuation order flow. Here's our clean chart. Again, like I said, there's just no movement here. Price is going sideways. So the orange lines are indicating the start of consolidation or range. The green lines are a label of identifying the initial like breakout move to a new zone or a new area. And if you have a blue line, it's going to indicate a directional move. There's no directional moves here today. We're just going sideways into breakout. So sideways, breakout, sideways, breakout, sideways. So what happens after the sideways move? It's either going to be a breakout or it's going to be a directional move. Ideally, it's probably going to be a breakout, probably not directional. But you can see here from the clean chart, yeah, price is just ranging between the 950 mark and the 900 mark down here. Here's our main chart. So liquidity right here got hit. I will take that off. Oops. Took off the sessions on accident. So price is kind of just sitting right here at the sessions right now. Not really too much going on at this area. Again, the overall direction of bias is bearish. So if you still want to trade directional or take some sort of entries, I would stick to the overall bias. So like what Sam's doing here is his bias is for his sell. So even though market's going sideways, if you do want to take something, I would personally look for possible trades in the direction of the sell. Price doesn't always go in the direction of the trend, but if you're trading for a sell here, even if you make a mistake or you do something wrong or you enter a bad position, the odds are price will still probably push in your direction because the overall direction here is a sell for the 4 hour, 1 hour, 30 minute, 10 minute, 5 minute, and 1 minute. That's why it's always key to have some sort of bias when you're trading. It's not necessary and it's not required, but it's going to help you. It's going to be in your confluence. So let's see. Sam said 43957 was my resistance, but no V1. What other ways to find reversal, Sean? So let's see. Let me see where your time is, where your price was at. 43957. 43957. So your reversal point was right here. So this actually could have been a CV pattern. I'm not sure. It's very hard to see because the candle looks like it's about the same size. But if you're familiar with the CV pattern, CV is like another reversal pattern. It's called consolidation variation. It's just like a V1 variation, but instead of it's an inverse engulfing pattern. So like, for example, you see the high here, if the candle next to it's small, then it's like an inverse engulfing. So instead of looking for this candle to engulf this one, you're looking for the previous one to engulf this one, and then it ends up being a reversal pattern to the downside. So I mean, I don't know if I would consider this a CV pattern because it's kind of the same size, but usually when they're lined up together, you can tell if it's a CV pattern. So let me show you an example of that. So this right here is a CV pattern. See how this candle prior was like really big, and this one was small, but it reversed, so it went the other way. So this one over here, I mean, if you were really like kind of forcing this entry and looking for some sort of reversal pattern, it would be that one right there. That's the only thing I can kind of see at that price point because your entry is right here at 57. So if you saw this pattern right here, you saw the rejection, and then it would have came down. Let me see if there's another example over here. So here's another example again right here. Price came down. The initial candle was huge, and this one over here is very small. So it's what I call a CV, which is a inverse engulfing. Typically for an engulfing pattern, you see this, right? You see a first candle, which is small, and you see another candle that engulfs it. The inverse engulfing or CV would be the opposite. So you see a big candle and you see a small one, and then it pushes up. Same with like this one right here. They're not as strong as a reversal pattern. So like if you have a double body rejection and it's engulfing on top or reverse engulfing or CV, then it helps a lot more because you have like basically two confluences. But yeah, if you go off the high low and you see one of those types of patterns, it shows you that there's a shift in power, right? So like for example here, this isn't engulfing because you see price push up and then it's a really big red candle. It's shifting this way. And then vice versa, you have these really big red candles here, and then you have a small green one, and then it shifts this way. And then same with this one, engulfing shifts this way, inverse engulfing shifts this way. And it kind of just continues along. But that's probably the only, that's probably the only thing that I can kind of see there for the most part. Sam said it's a break of structure for me. So let me see. I mean, there was break of structure on this area too. You could have used a pivot. So that's like one other thing. But it wouldn't be a reversal pattern. That'd be a continuation pattern, right? So looking at this right here, see how price pushed up and your number was over here at 957. I would have waited for this to break and close below the pivots like it did right here. See how price pulled above the pivots and then it closed back below. In that situation right there, that's where you could have taken the entry if you were looking to take that there. So, I mean, there's a lot of different types of break of structure that you can look for. You can look for break of structure from the high lows. You can look for break of structure past the pivots. You can look for break of structure past the sessions. Again, the sessions are right here. So I probably wouldn't take any sells here at this specific area because this is an area of manipulation because of the sessions. But I mean, you can find a way. Like there's always something on the chart that you can look at that'll kind of push you in that direction. But for the most part, I would probably sit like I would hang out right here because of the sessions. Like I wouldn't take any trades on this area. You can see whatever price gets near the sessions, price tends to it usually goes sideways or it fakes out. So you can see over here, price came around this area, came below the sessions, faked out. Price pushed above the sessions, faked out, pulled back below, and now it's going sideways. This is why I don't trade at the sessions, especially if the sessions are super close to each other. I for sure don't mess with them. Same with up here. See how price pushed up, came up to the sessions, faked out, pulled back below. So I don't mess with the sessions here. It's the whole reason I created the indicator to avoid trades around those price points. Um, let's see. Brock's asking Sean, may I see what your chart looks like on the daily? Sure. You want to see the main chart? Because I have all the markings on here, so it's probably gonna be hard to look at stuff. But this is what it looks like on the daily chart. It's a little messy because we have a bunch of liquidity kind of sitting all over the place. I've marked up liquidity pretty much everywhere. You guys can see there's a ton of liquidity sitting up here. So on Monday, we might get a bullish push and it might knock out all this liquidity if it doesn't push up by today. So yeah, this is I mean, that's basically what my chart looks like. It's coming back down and kind of testing the pivots on the lower end. Yeah, no problem, Brock. Yeah, so looking at this over here, guys, at the 4 hour chart, I mean, price has been coming down for a while now. So looking over here on the 4 hour, price has been dropping since December 4th. So from December 4th up until now, price has been coming down. I think there's going to be a correction at some point, probably next week. Let's check the news calendar. So today we didn't really have too much news. We had import-export prices, nothing too huge. Next Monday, we have S&P Global Services PMI. So we have inflation news tomorrow, or not tomorrow, on Monday. Then we have retail sales on Tuesday. Then we have building permits on Wednesday. We have the Fed rate decision on Wednesday as well. It's going to likely drop a little bit by 0.25%. Next week is Fed week. So we have, like I said, we have inflation news, we have retail sales, we have building permits, we have FOMC economic projections on Wednesday. This happens like pretty much third week every Wednesday. The FOMC minutes and the interest rates are going to come out too. Then on Thursday, we have continuing jobless claims, initial jobless claims, GDP growth rate, existing home sales. And then Friday, we have PCE price index, some more inflation news. So yeah, next week is Fed week. And so now that I have that news in mind, I think what's going to happen here is price might just come down a little bit. And then by next week, it's going to climb all the way back up. Because if we have a cut in interest rates, it's going to be good for the market. It's not a big cut, but it's still a cut. And if we're cutting interest rates, that indicates that the economy is doing better, which I don't think we are, but go figure. Yeah, Brock said he's looking for a bullish move next week, assuming we can close bullish today on the daily. Sam said, I agree. It's sitting on the last support for him on the higher time frame. So he wants to buy at a good level. Yeah, no, definitely. I agree, guys, 100%. But as of now, price is still kind of bearish. So again, if you guys want to shift your TP stop loss for the breakout to 100, you'll probably see a lot more luck and a lot more success trading it. The only problem is that, when you start to tighten or widen your TP stop loss like that to a 1-to-1, you have to increase your win rate. So hopefully that there's going to be more wins if that becomes the case. Otherwise, you're going to be in the same situation that you would have been if you would have just waited out. So for me, I'm just going to wait it out until we have a win because there's just no need to make any changes. For me personally, I don't think there's a need. I think this is just this is one of those weeks where the market's just very unusual, and it usually starts to balance out or smoothen out. As we get closer and closer to the following week. So I think this week's just a toss-up for the most part with regard to market structure. If you guys have been following all week, market structure hasn't been good at all. You can see over here prices have been consolidating and ranging for the past like 30 minutes or so. Again, this is going back to what I talked about in the past, guys. So remember I told you guys before, my edge in the market is typically between 640 and 7. You can see over here between 640 and 7, we could have probably taken some trades here. 640 hit right here. There could have been a possible scalp. Let me go check real quick if there's any scalps that came up between 640 and 7. So there was a breakout V3 continuation right here that could have been taken. So, like I told you guys in the past, I think it's probably best to just stick to the game plan, right? Probably best to just stick to the game plan and I mean just stick to what we've been doing. I know I've been looking at a lot of new things and just kind of looking and testing new things, but for the most part, I think for the scalps, I think it's best to just stick to the game plan, guys, because like really there was not very much happening here, but if we were just patient between 640 and 7, we could have taken the breakout V3 continuation. There's nothing special about the entry here. It's just a breakout V3 continuation. Yeah, because I don't really see anything else here that would have played through. I mean, technically, I guess we could have looked for a possible market flow V2 up here. Yeah, there was actually market flow V2 that came up right here. So now that I'm looking back at it, guys, if we go back to like the basics of like whatever we've been applying, I mean, for our normal scalp entries, there was actually a lot of good entries that happened, like decent. I wouldn't say good, but I would say decent entries over here that that came up. So like market open right here at 630, price pushed up, price retraced down right here. There was a market flow V2 entry that happened right here at 6, or sorry, at 30 mark. So 44, 30, that was a breakout V3 continuation. And then that would be it for that move. And then looking at this here, there's nothing else that came up. So here's like one, or actually this wouldn't have been an entry that I would have taken because it was right at the sessions. Yeah, I wouldn't have messed with that one there. But yeah, I think this week was just another reminder to just stick to what we're good at, right? I'm gonna stick to the breakouts and I'm gonna stick to our normal scalps. I know this week I try to implement like order flow. I just started implementing order flow because someone mentioned it, but like I said before, it's not required. Like you don't really need order flow. Order flow is good if you're like using it for something specific, like a reversal or continuations, but for the most part, it's not necessary. It's not necessary if you're following momentum. Um, Here's the SR chart. So it looks like price is finally trying to break past the resistance right here. But if you look over here on our main chart, price is still pretty much for the most part going sideways. Yeah, let's say that would be amazing. Flatline Friday. Yeah, there's not really too much going on here. I mean, going back to what I talked about in the past, usually my cutoff is 7 o'clock anyways. And then you can see over here by 7 o'clock, the market does go a little flat. So the yeah. There's just nothing here to work with, guys. To be honest, I wish there was something here for us to work with and take something here, but you can see here that the market's not really doing anything from here up until basically from 7 up until now. You can see that's where the consolidation started happening. So here, I'm going to clean this up a little bit. I'll just show you a little bit what I was talking about earlier with regard to so typically the breakout will happen right here, right? From like 6:30 up until, and I'll color this green. So between 6:30 and like 6:35. Typically, that's like where the breakout will typically happen. Right here, obviously, it wasn't a breakout very much. It kind of just pushed up, came back down. So this is usually the period where we take the breakout. And then usually I look for some scalps here between 6:40 and 7. And then from here, I'm usually done trading. So you guys see here, this is like my edge in the market. So my edge is typically going to be the breakout in the morning and then look for like 1 or 2 scalps between this middle area. And then I usually call it a day. And then you can see over here between 7 and now, price is literally just going sideways, right? So now that I kind of look back at this and we're just keeping things as like we're keeping it simple, like what we've been doing for the past year, basically. Um, this kind of simplifies a lot of things. I think because of like the the mastery classes, I was trying to explain to you guys market structure, but I mean realistically, the market structure doesn't matter too much because this is where my edge is anyways. Between 6:30 and 6:35 is the breakout, and then between 6:40 and 7 is my scalping time. Because like, we could have caught like 1 or 2 scalps within this area. Like I said earlier, there's a breakout V3 continuation that came up right here. So sell signal, red candle right there. This could have been the one entry that I took for the day. For scalp, and then I think there was a market flow V2 that actually came up right here too. But I think the market flow V2 came up a little too early. So I probably would have skipped it. Because it happened right here at 6:30. It didn't happen within my edge time. All right, so I think like, moving forward, I'm just gonna stick to like the basics because I'm gonna stick to like what we've been doing. Obviously for the breakout, I have to wait for a win before I take another entry, but for the most part, let's kind of stick to what we've been doing. I don't want to overcomplicate it. Same with like what Viv was saying. Like Viv said, there's like way too many strategies, which there is, and they all work perfectly fine. It's just you got to stick to like what you're good at. And what I'm good at is taking 1 or 2 scalps per day and taking the breakout when it's available. So yeah, Viv said I like your edge, breakout and scalp. That would work for me. Yeah, because that's what I've been doing. I've just been like my ideas have kind of just been flowing throughout the week because we've been doing this mastery class, and it kind of reminds me of like things that I was working on in the past, but I never really finished. But we already had something working that was been working pretty good. This is probably the first week where I haven't really taken any entries, surprisingly. I'm kind of curious to see the market from yesterday to see what was happening between 6:30. I mean, obviously the breakout we didn't take, but I'm just kind of curious to see. So 6:30 to 6:35. And then 6:40, 7 o'clock. So looking at this here, I mean, it looks like there may have been some entries here for me as well. Yeah, because I would have just waited for price to come down, and then from here I would have taken my entry. Doesn't look like there was an entry here, but so there could have been a market flow V2 right here. Actually, okay, so if I took the entries yesterday, looks like there would be one entry right here at 6:40, like literally at 6:40. There was a buy signal here, price came down. The market flow V2 would have happened right here at the 210 mark, and it would have hit. And I think that's about it. There's no breakout V3 continuations here. There's a sell signal. It wasn't followed by a red candle. Yeah, I got to go back to what I was doing before, guys. I just got to stick to my edge. I've been trying to do a little too much now, kind of trying to explain to you guys different things on the chart, but like realistically, a lot of this stuff doesn't really apply to me. I was just trying to cater to other people in the group who are asking questions, like, the support and resistance chart. There's nothing wrong with having the support and resistance chart, but it's just not what I trade. I got to stick to my edge. So starting next week, I'm going to go back to what I've been doing all year. I'm going to stick to the breakout. Obviously, there's not going to be a breakout until we have a win, so I'm not going to take the breakout, but I'll follow it. And then I'm going to stick between following one or two good scalps between 640 and 7. I think that's probably going to be the key thing there. I need to stop trying to implement things that are like unnecessary. Like the reason why I looked at order flow is because I talked to Maddie. If you guys remember Maddie, he's still trading. He's just trading by himself. And he's been using order flow lately. So he kind of talks to me about order flow, and I kind of talked to him about it. And I told him, yeah, it's good for like certain things, but it's not really super necessary for my style of trading. And then I try to implement it into my trading, but it's just not necessary. Like I don't need the order flow for my trading because I already have my edge in the market. My edge is between 640 and 7. Um, the thing is, if I follow the order flow here, this thing it could take all day, right? Because like I showed you guys here, like when we're looking at order flow, we're looking for the buyers or the sellers to be in control. Realistically, I don't care who's in control. I just care where momentum's at because I want to go for those quick like 10 to 30 point moves. Um, but it's not really necessary for our trading. So I'll leave the order flow up and we'll use it as a confluence, but I'm not gonna create a whole strategy with it because I mean, if you guys want to keep applying the breakout V3 with order flow, you can do that, but I'm not going to do it. It's just too much work. And if you guys have known me for a while, I'm trying to do the least amount of work and make the most amount of profit, which is trade between 640 and 7, um, and take, a decent amount of risk so that if I do take one or two trades, it's going to yield a pretty decent amount of profit. So. Yeah, Lila said, you are the master trader, so if it's not broken, don't fix it. Yeah, I agree with you 100%, Lila. This is why I don't really teach anymore. So, a lot of you guys have asked me in the past, like, why am I teaching now? I just teach around this time of the year. But the problem with me teaching is that I start to get too many ideas and I start to try to change the way that I'm trading slightly to kind of accommodate for like people that I'm teaching. So this is why I don't really teach anymore. If you guys have like noticed over the past 4 years, I don't really mentor anymore. I'm not really trying to sell a course or anything like that. I like to trade and then I like to make my money from trading, of course. And then now since I'm starting the hedge fund, the majority of my profits come from mainly trading because I'll have my profits come from the prop firms. I'll have my profits come in from my own account, and then I have my profits come in from like the hedge fund clients. So yeah, I think once we're done with this mastery um, course or lesson or whatever, the futures mastery day trading class, I'm probably going to pull away from mentoring for like the rest of the year, next year probably. I'm just gonna stick to what I'm good at, guys. Like I don't need like support resistance is good, but again, like I was talking with Sam here, I don't really use this stuff. I don't use support resistance. I was just marking up the SR charts over here so that you guys can see. But for me personally, I don't personally use it. I mean, it's good to see market structure here, and I like to be helpful for a lot of people, but I don't personally use it myself. Same with the clean chart. I mean, the clean chart, I don't really use this either. I just use this to see market structure so I can explain to you guys what market structure looks like. So I'll keep marking it up. Don't get me wrong, guys. I'll keep marking it up and I'll show you guys what we're looking for, but I'm going to stick to like the main stuff. I'll keep the main chart open. Same with liquidity, right? I mark up liquidity here mainly for people to look at, but for the most part, I don't use it. So before we used to only mark up liquidity at the higher highs. And I think I'll continue to do that because the problem is when I mark up too much liquidity on the chart, my chart gets way too messy. Like I can't even see stuff on here sometimes. Like if you guys saw the liquidity from earlier this morning, there was a ton of lines on the chart, which were good if you're looking for liquidity. But for the most part, I'm going to keep the important liquidity on the chart. So the higher highs and the lower lows, not like every single little line, because it's just not super necessary. So looking at price right now, guys, price is still going sideways. And there's not too much here really going on at this point. I mean, it's past 7 o'clock, so this is past my edge time anyways. So it's not really necessary for me to look for anything here. See, Sam said, look at that V1 for sell. Let me see where it came up from. Where'd the V1 come at, Sam? I don't see it on my chart here. Unless you're talking about the CV pattern that came up right here. This is a CV pattern, it looks like. So there's a double body rejection right there. Or I guess this is a V1. Yeah, this might be the one you're talking about. It's a double body rejection or double wick rejection. That could have been the sell right there for you. Right back down to the sessions. Yeah, Viv said, teach what you do and we will follow. Yeah, I agree. 1529. I just realized you're in a different time zone. So yeah, you're talking about this one right here. I was like 1529. You're in a way different time zone because we're at 727 here. Yeah, no, definitely. Yeah, Sam said, Sean, you're a winner, bro. Trust me, it's helping me during the trade. Don't worry about support resistance. Yeah, no, I'll keep marking up support resistance, but well, I mean, it wouldn't really matter because I'm going to be focused between 640 and 7 anyways. So we'll go back to what we normally do, guys. 640 and 7. I'll look for my entry. I'm going to go back to like I need to reread my book. There is this, so if you guys haven't read this book, it's called One Good Trade. Whenever I feel like I'm going off track with my trading, I usually go back and I review that book. It's sure, I'll pull it up for you guys. So this is kind of my criteria that I've always been, that I've kind of always followed. It's just my trading style. So there's this book. It's called One Good Trade by Mike Bellafiore. He's the owner, or he's one of the owners of S&B Capital. It's like one of the longest legitimate prop firms that's out there in New York. So it says One Good Trade inside the highly competitive world of prop trading. So basically, what this book explains is, you want to focus on just one good trade per day, and then of course, if you get better and better, you start to increase risk. So whenever I get off track with my trading and I start to do things that I don't typically do, like testing strategies or stuff like that during the live sessions, I typically go back to this, and this book reminds me like, okay, I need to go back to what I'm good at, which is one good trade. I put all my focus into this little time period right here between 640 and 7, and I look for just one good trade between this period, like one winning trade, right? And if you think about it, like there is one good trade that comes up. Like for example, the breakout V3 continuation came up right here, and there was no problems with the entry, and that would have been my one good trade for the day. I would have taken probably like a 15 contract size. So 15 contracts times 5 times 30 would have made about like 2,000 off that trade. So yeah, I just got to stick to like, my trading plan, which is looking for one good trade between 640 and 7. And then of course, on top of that, the breakout, but we're not taking the breakout right now. So it wouldn't really matter. So yeah, if you guys are looking for a trading book to read, I mean, this is like one of my go-to books, One Good Trade. Obviously, you guys know the other books, like the other book that a lot of people like is Trading in the Zone. I don't really listen to Trading in the Zone because I don't really have a problem with trade psychology anymore. I mean, this is good for a beginner trader. If you feel like you have a problem with trading psychology, of course, Trading in the Zone, everybody knows this book, or you should know this book. If you don't know this book, you should know this book. This book's a good go-to if your discipline is like, if it's really bad, if your discipline's really bad and you can't stick to the game plan or the trading plan and you start to trade on tilt, this is probably one of the good books. But these are basically the two books I go back to. I always go back to this book though. So I'm gonna go back and re-listen to the audiobook probably today and tomorrow, and then hopefully get me back on track for trading next week. Just gotta stick to what I'm good at. Yeah, Barack said I've had that book for months lying around, never read it. I will now make the effort to read it. Yeah, no, it helps a lot. Definitely helps a lot. I think you have the free ebook too if anybody wants it. I forgot where I posted it, but yeah, if you guys want it, just message me. I think I posted it somewhere like on the Telegram or something like that. Or you can find it online, so you just Google it. Let's see. Yeah, Sam said, yeah, Sean, it's December. You know it well, what happens with low volatility and holidays. Yeah, that's why I've been a lot more cautious with, taking trades around this time, especially with the breakout, because, the low volatility and the whipsaws and the sideways move, it just doesn't, it's not, it doesn't go hand in hand with breakout trading or with momentum trading, because you need to have some sort of direction. Um, so yeah, no, I agree with you 100%, Sam. And that's why I'm kind of like just hanging tight. So liquidity right here got hit, but it was a little farther down. It's like new liquidity got established down below right there. But we're not really seeing too much here. So, all right, guys, if there's any questions that you guys have, feel free to pop into the chat. And I can answer whatever questions you guys have. But looking at the market so far, I'm just not really seeing anything here for now, guys. 746 right now, as you guys can see, prices going sideways. There's not really too much direction here. So looking at the price points right here, you can see prices ranging within this area here between the 950 and the 900 mark. And whenever it pulls out of this area, it typically fakes out and pulls back in. So price will pull out right here and then pull back in. Price will fake out right here and then obviously pull back in. Price fakes out right here and pulls right back in. This is why I stop trading after 7 o'clock usually, because you can see over here between 7 and 8. So I have everything kind of marked up here. Between 7 and 8 o'clock, it's usually a sideways market. And this is just the way that the market moves. The reason why I was able to figure this out is from my journaling. So like what I used to do, what I still do actually, I still journal my trades and I try to figure out like where my wins are happening, where my losses are happening. What I've noticed from my journals is that my wins will happen here between 6:40 and 7, and between 7 and 8 is usually where my losses happen. Sometimes I'll have like a couple lucky wins in between here, but for the most part, from my data that I pulled over the past probably 4 years of trading, it shows that my wins happen right here and then my losses happen right here. So what happened is I just stopped trading after 7 o'clock. Whether I have a trade or not, I just stopped trading after 7 o'clock, because that's my trading plan. Yeah, exactly. Viv said it tells me all my bad habits, but I need to know how to control them. Yeah, and I agree with you too, Viv. Um, me too. I kind of went off my trading plan looking at our trades. So let me look at my trades for, actually, I haven't taken any trades this week, so I don't have any trades to look back on. But for the most part, on my journal, let me see if I can pull it up here. So these are the trades that we've taken so far this year. So for this year so far, I mean, I haven't really taken too many trades at all. There's only been a loss that I took on Monday, so 12. And this is why I didn't trade on Monday. Or no, this is why I did trade on Monday, but I shouldn't have traded on Monday. So I kind of screwed up on Monday. We had two losses already from Thursday and Friday, so I wasn't actually supposed to take the entry on Monday, but I took it because I didn't look at this here. So I kind of screwed up for Monday by taking the trade. But technically, I wasn't supposed to trade this week, because you can see over here our risk off plan was already activated from Friday. And then I still took the trade on Monday here, which lost, unfortunately. Tuesday's trade won, but the Monday trade over here lost. I haven't really taken many trades here for December actually at all, if you can see over here. Looking over here at November, So you can see majority of my trades, they happen before 7 o'clock. You see, I have a couple wins here. Like for example, I have a win here that was at 7:26. It was a breakout V3 continuation. But you can see here that this trade lasted forever, right? I took this breakout V3 continuation, but it played out for like almost 20 minutes, it looks like. So probably would have been better off just not taking that trade there, even though it did win. And then looking at this here, there's like maybe like 2 or 3 trades that happened after 7 o'clock, which were partial TPs, and you can see they were kind of crappy entries. So yeah, I think I just got to go back to sticking to the game plan, guys. Like you can see over here that, whenever I go off track, it kind of throws me off a little bit. So in November, I kind of went off track slightly, just a few times. But for the most part, if I just stuck to trades before 7 o'clock, they all would have played out pretty much perfect. Um, yeah, so the trade on Monday, for this week, I only took one trade, which is Monday, and it was a loss. Should have been skipped, but it is what it is. I can't go back and take that back. But yeah, for pretty much for the most part, this is the only trade I took for this week, which was on Monday. And then it was one of those trades too that kind of whipsawed back and forth. It wasn't even one of those trades that we were actually in profit, but then price kind of whipsawed to the downside, stopped us out, and then it pushed right back up. So it's all good. It was just one of those trades where trade would have lost in either direction. So I'll put the notes over here. Same thing. Slow month so far for December, but it's okay. We'll bounce back next week, of course. Viv is asking, is that auto journal or manual? It's manual. So I do everything by hand. This is if you want access to this journal right here, you can use it too. Viv, just go to the Discord, go over here to 2024 official live trades, and then just scroll up. It says blank template of trade journal. Click on this right here. This is what will come up. And then all you need to do is go to file and then make a copy. So when you make a copy, you can use it as your own, or you can just copy yourself. You can just click up here, hit Control A or Command A. It'll copy pretty much everything on the chart. And then you can just copy it to your own chart. But it's easier to just go here to file and then make a copy. And then you can just list all of your trades here for your trading journal. You can put the date, time, buy, sell, win, loss, profit, trade, strategy, markup of your chart, basically a screenshot of your trading view, and then put your notes here. And that's how I got to where I am, because I document every single trade. And you can see every single trade I've taken for this year so far. I mean, it's been a pretty good year overall, but for the most part, I mean, December is typically a slow month anyway, so we're gonna power through it. Yeah, no problem, Viv. Brian's asking, hey Sean, how do you get the order flow featured on the chart? Yeah, so to get that, just go to your chart here and then go to your candle type. So normally it'll say candles, right? So this is what it would look like. You just go up here, change it from candles to volume footprint. And this will show you the order flow per candle. That's how you get it on there. So, all right, guys, if there's any other questions, feel free to hop into the chat. Otherwise, unfortunately, no trades for today. That's just, it's the type of market that we're currently in right now. So we'll come back next week fresh, and then hopefully we'll take more trades. I'm gonna go back to sticking to like one good trade per day, and hopefully that will be enough to carry over into the rest of the following month, and as we kick off into the new year. So we'll power through the rest of December. We have about, let's see, it's December 13th. 1, 2, 3. We have about less than 3 weeks until this over here. Barack said, Sean, is that like, no, she's not. My wife doesn't trade. She's in the background, but she's not here. I don't know where you even saw that. Oh, are you talking about Viv? Viv is in the stream. She's just one of the traders here. My wife's not on here. She doesn't trade. She's she does something opposite of trading. So yeah, she doesn't do any trading at all. But I'm talking to Viv. She's on the Zoom over here. I was saying Viv and Barack thought I was saying Babe, but I was saying Viv. Viv is in VIV. Viv short for Vivian. Um, yeah. Yeah, no, it's all good, Brock. I know it might have sounded like that because my voice is all kind of raspy right now. It was cold weather. Sam said, thanks for today. Have to learn CB now, going to the website, free stuff. Yeah, definitely. All right, guys. So I think that's it for the day. If you guys have any questions, feel free to reach out. Otherwise, I will see you guys back here on Monday for market open. Again, the market this week was kind of choppy. You can see over here, there's no movement. So there's no need to force any trades, guys. What I recommend is just, go enjoy your weekend. We didn't really take any trades this week. I took no trades actually, aside from the breakout on Monday. So I'm gonna go into this weekend fresh, come back with new mindset for the new week, and we'll just stick to the game plan. So I'm gonna look for scalps between 6:40 and 7, and I'll look for the breakout in the morning on open, of course, if we do have a breakout that's available. So, all right, guys, have a great weekend, and I will see you guys back here.